Hi, this is Steve Ferguson with Thrive Mortgage. It's great to meet you today. I wanted to personally explain to you our bridge loan product so you had a clear understanding of what it looked like and how it can help you buy the next house that you're interested in without contingencies and without selling your current home first. So let's get started. The bridge loan is a great product. So the very first thing that I want to point out to you on the bridge loan is that it's up to 80% of the home market value for you. So they're going to do an algorithm. We're going to plug in the data and they're going to spit out a value based on whatever you and your listing agent create for the sales price. They're going to analyze that detail and give you up to 80% of the value of your home. The next thing is the property has to be in good condition. It's not designed to take care of properties that need a bunch of repair. It is designed to work for properties that are in overall good condition. So here's an example. Let's just assume your current home is worth $500,000. Your payoff's $150,000. What they're going to do is they're going to take the current market value, which is $500,000. They're going to take 75% of this value, which is $375,000. They're going to take away your payoff. Let's just assume for argument's sake that your payoff is $150,000. That's going to give you a 0% interest loan of $225,000, which is awesome. And you can do anything you want to with this loan. You can pay off debt. You can put it for money down payment. You can pay closing costs. You can do anything that you would like to do. You can even paint your departing residence to make it sell for more money. The money is yours to use how you would like, and it's 0%. Okay? So let's talk about what happens next and what happens if. So once your loan closes on your new purchase, you're buying your new home, you've used this bridge loan to put money down on the new home or whatever you've done with it, and you've closed. Now you have 120 days to sell your existing home. The great news is if you don't sell your home in 120 days, our program buys this home from you. Okay? Don't have to worry about it anymore. You're not going to have any more payments, no more taxes, no more insurance, no more carrying costs, repairs. The program owns your home. They take ownership of it and you are done. Okay? The program is going to continue to market your home with your current listing agent until your property sells. They're going to communicate with them, figure out if there needs to be a price drop or whatever they have to do to make sure that home sells in a reasonable amount of time. And then once it gets sold, it gets sold. So when your home sells, the program is going to subtract out closing costs, carrying costs, realtor commissions, and a 2.4% fee based on the sales price or a minimum of $9,000, whichever is greater. That's the program fee. You then get a check for the rest. So let's do some math. Let me explain this to you so you have a clear understanding of what it is. Okay? So here's how it works. Your home, let's just assume it took longer than 120 days and it sold for $475,000. All right? Then we subtract out the realtor commissions, which is $28,500, which is 6%. If you guys negotiate a different number, that's up to you, but let's just assume 6%. Closing costs, let's just assume that you've agreed on the sales price to give 1% in closing costs. That's $4,750. And then they subtract out the carrying costs. Let's just assume it took them 2 weeks extra to sell your home. So they're going to subtract out principal and interest payments. They're going to subtract out any maintenance they did on the property, etc. And for this example, I'm using $3,000. And then they're going to subtract out the program fee, which is 2.4% of the sales price. So that's $11,400 based on the $475 sales price. And then they're going to subtract all those things out. So you get $475 minus $47,650, which were the expenses combined, minus the $375,000 they already gave you. Remember, they paid off your current lien and they gave you a check for the difference. And then you get a final check in this scenario of $52,350. Which is fantastic. So I don't want you guys to think that if you agree to sell your home at 75% of value or 80% of value, whatever it may be, that that's the end all to end all. There could be additional funds for you, which is a great thing to have. And so this is a great example of what that could look like. Now, every situation is different. Every economy is different. But more often than not, our clients get that secondary check to make up the difference. I really hope this explains this program to you. If you guys have any questions, please feel free to reach out anytime. And I look forward to speaking with you soon. Have a great day. Bye-bye.